Good morning, everyone, and welcome to the European crossover webinar. Make sure that everybody can hear me. We did experience some technical issues earlier on Chris Asara's show, so the audio seems to be working just fine here. And we'll take a look. We did see that the dollar yen did go on and pull back further, and we're just going to take a look at stuff. I really wasn't ready because it looked like we did have technical issues, and I checked it out, and there was no audio, and then I checked it again at 4:30, and still no audio, and all of a sudden now there's audio. So we're just going to take things slowly. So the dollar yen has weakened. We've come into a little bit of support right around the 1265 area. We're currently at 1286. Had a bounce from that area. Euro stayed relatively quiet. We did take a quick dip. We didn't make it all the way to the high to the lows, but I mean the lows during the U.S. session. But we're currently trading at 1101. I think you have to be a little bit careful on this. If we get a foothold below 111, then I think they may just go in and try and lean on them. But like I said, we were higher earlier, so there may not be as much of a pressure because anybody that was short might have had any concerns. Obviously had the opportunity to go in and get out at better prices. Looks like we made it all the way up to 1139. So I don't think there's much as since we made up that high. If we had remained under pressure, maybe the best we could have rallied to was like, let's say 1120. Then I think that you could have seen some problems as any bulls that had been earlier in the week above, let's say 1030, would be really under pressure. So really these, as we came back, the bulls that had bought higher had the opportunity to get out flat, or as it started to break lower, get out with a minor loss. So I don't think there's as much pressure. We'll have to see how this plays out. But at the time, doesn't seem to be as much pressure. I'm seeing here that on the headline, Sterling struggles, the second day of EU, so it gets underway. This might also bode for a little bit of support with the euro. Hard for the euro to break down when sterling is going to stay weaker with this whole Brexit thing. So that may keep it from actually working a little bit lower. So I think that needs to be taken into consideration. I think if we would have been able to maintain a foothold below 111, they could have kept them under pressure going into the U.S. session. So as we come into the U.S. session, for today's report, we're going to have CPI, which that'll definitely be a mover right there. But like I said, I think you have to take into consideration, I think, like I said, if we could have kept euro and not able the ability to scale above 1120, I think that would have allowed us to keep the pressure on going into today. But like I said, with this sterling really under weakness, that's probably going to keep a little bit of a support there for the euro. So we may not take another leg down because you're going to see a lot of support for euro pound, I would believe. Let's see, and we also have Canadian CPI, Canadian retail sales, and we do have Eurozone consumer confidence. So, as I mentioned, we're going to have a CPI coming to the U.S. session, which will be 8:30 Eastern. We'll also have CPI, Canadian CPI, as well as retail sales. Eurozone consumer confidence comes in at 10 a.m. Eastern. The euro made it all the way up to, gold had made it all the way up to 12.39, which was a surprise to me. I thought we would run out of gas, worst case, probably like 12.23. So gold continues to surprise. I thought, like I said, Blake was right that it is overall holding up well. We're hanging above 12, although the SPOOs had moved higher. And then we gave that opportunity to really make a run. We got up there to the 12.39, and then we've seen a pretty decent pullback. Actually, we made it all the way up to 12.40 and change. So we almost saw a $20 pullback, and currently sitting at 12.24. So we're going to take a look here at the euro and see how we stand there. Scott says a case of beer on the line will make you think funny for sure. Yeah, apparently. The thing is, even though I wasn't trading gold, and I'm not talking about, the last, week and a half, which I did, but I'm saying is that whole time when it was going up and down, we had a pretty good feel on that thing, but you'd have to hold it overnight. But that was my whole contention why, we just weren't seeing that movement, but you have to hold it. And we had a pretty good feel. And now, like I said, I have to admit, I've been just dead wrong on the way this gold, to certain levels, I'm looking at like that 12.39 being a key. We talked about that as a key bias period. There's no way in hell you would have thought, I would have thought we'd have made it to 12.39. I thought we'd have to dip below 12, and then we have a good chance to go right back up there. But obviously, like I said, one thing about gold is it's a sentiment-driven market, and it can really, get scooting. So let's go on and move into the euro. I really don't expect a lot of action now today with euro in light of what's happening with the pound. And I think that's going to be supportive. I think, like I said, if we could have kept a foothold below 111, I think they really could have pressured them today. But obviously with this summit, that's going to be supportive for the euro, as I think the euro pound, like I said, that's going to keep it right there. So let's go and move into the charts, take a look at that. So as you can see here, we made this run up here to about 10.39, and my whole thoughts were if we can keep it under pressure and keep it beyond this 11.15, below this 11.15, that would have pressured the bulls that have bought in this area. So if we would have just only been able to rally to 11.15, let's say around here, maybe even 11.22, then I think that would have opened the door for a move down here. But the people that bought in here, they had the opportunity to still get out. So, and being a Friday, and if you're down, let's say you were down at this point at 1070, let's say you were down about 70 pips, 60, 70 pips, and you're like, oh my God, I'm going to put my stop below here, there, or wherever. So you come back here, and now you're like back to flat. And it's a Friday, and you're thinking, well, I don't want to hold this thing over the weekend. I really don't even know what's going to happen. You know what? I was wrong to start with. I'm going to get the hell out and break even. Or I'm going to get out with a 15 pip loss or 20 pip loss, and I'll see what happens. I'll just have to start the week over. And so this gave those people an opportunity to get out when we made this run here. So now we've pulled back, and you can see we didn't even take out the prior lows. So that's what I'm saying. I think that kind of, to a certain extent, I wouldn't say it negates, but it takes the pressure off for that move lower. And then on top of that, then you've got something that's actually supportive, which is the issue with the Brexit summit or whatever you want to call it. So that's going to be supportive for euro overall, because that's, I don't even know where the euro pound is. What I'm just saying is that's going to hold steady. It's hard for the euro to sell off with that backdrop. So then that's going to be, and euro pound's pretty huge, so that'll probably stop the euro from being, really taking a, good little dip, which I think could have taken a dip if we were not able to rally, and we did rally here. So that was able to let the people that would have been long from here, that would have pressured it and had their sell stops here and taken out, those people, not all of them, but probably a good chunk of them had the opportunity to get out here, 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 here. If it loses 11.15, I'm out. They got it. If it loses 11.10, I'm out. All that stuff, those people were able to go on and get out of their positions, so there's no pressure. So if you think about it, now you're saying, I'd like to sell the euro, but then you'd have to see what happens. What if the summit doesn't go very well, and then that's just going to keep the euro really well bid. So that's what I'm saying is I like to tie in, I'm primarily a technician, but I like to tie in not so much, like I said before, fundamental news, but I like to tie in a theme. So if you look at it, and also I talk about, someone was asking Blake about that, what does he mean by price structure? And this is what I mean by price structure. Blake did a pretty good, definition of how he saw price structure. And that's what I'm seeing is that I think that the people that bought in here, they had their stops down here. Not all of them, but probably a good deal of them had their stops here. They go, oh my God, if we break 1070, we're probably going to go to 1036. Maybe we're going to go towards the lower 10. I'm going to be out. I'm just going to put my stop just below here. So the idea that we rallied all the way back up to 1139, then a good chunk of these people were pretty much close to flat. Because I'm not talking about people that bought at 1120 or whatever. Those people were already up a little bit. But I'm saying the people that bought in here, right below that 1150 or 1150, they're pretty much close to flat. And they may have even added on as we broke lower. Maybe they added on it. We talked about the market going to 1107. If you remember, but I think by Tuesday or so, we were saying about 1107. And we actually made it to 1106 on Wednesday. And then we bounced up from that area. So, those people, like let's say someone had turned around and bought it 1110, they added it at 1110. So all these people had the opportunity to get out flat or close to flat or only down a little bit. So you've taken, now you don't have that pressure here. That's what I'm talking about, the price structure. So it makes it hard for the market now to take a leg down, especially like I said on the backdrop of that, Brexit summit or whatever we're going to call it. So that was on the 2 hour. Let's just take a look what's happening on the 30-minute, and really a whole bunch of nothing. But you can see here that we've come up to the zone. And there's our zone, the 984 to 1134. So we've, you can see here where this zone was support on the way down. We bounced off a good 60 pips. Becomes support again. They're buying it against the top of the zone, and then we make another run up here. We fell back, and then we have a pretty good battle against this 1131. And when you break a zone, it doesn't mean that all of a sudden it doesn't count anymore. It's just you're showing here that you've got a good battle here. And so the market's trying to decide. So you're seeing all these touches, going right across. The market's trading on either side of the zone, but we're not able to go get any momentum on the downside. So once again, we hold the zone, kind of defend it here. It looked like we might get a chance to work higher, and then as you can see here, then the market, you get this little graveyard doji right here, and then almost like a hanging man, which probably bodes technically for a move lower, which we do get the move lower, but it's not really a whole lot. So they're still trying to defend this 1131. And then finally we slide below that 1131, and then you start to lose some momentum, and then that opens the door for lower prices. And we had already discussed that. We were looking for at least to move down here to the 10. Have this as 1089, the 30-minute, have it on the 2 hour, I think it's 1090. And if you remember correctly, I think it's 1092 was like the 50% or something. I don't remember what it was. I don't even have the fib there because we've already hit it. But and then we talked about this 1070, and actually on Monday we were saying, this is probably about as good as it gets here. You should see some short covering, but the market took a while before it got there. And I was hoping we could get another leg lower, but like I said, with this Brexit thing, summit coming up, and really you're really starting to see questions on whether people would really support staying in the from not breaking away. So once again, I think that's going to be supportive for euro overall. And so when we got this rally back up here, I think if we could have stayed below here, or 1120, then I think that would have allowed us to really make a move back down to pressure these people. But like I said, this move all the way back up to 1139, all these people that got long in here had a chance to either get out flat or with a minor loss. And some of these people might have said, you know what, I'll add a 1090. And so now they've had a chance to break even or even make a few bucks, so they got the hell out of Dodge. And so we came back here. The market may dawdle around here. I just don't see us making that move lower now that we've taken the pressure off on this rally back up here. So we'll take a look at the dollar yen, and we made that, we talked about it before about making this run to the 38%, and we kind of ran out of gas, and the SPOOs haven't broken down that hard, but the yen itself has gained in strength, and you can see here we're back to this, making a run towards this 1266 area, a decent area to go in and cover those dollar yen shorts. And then just above the market, you can see we've had this marked off before already. You see here, this line is providing pretty good support. We're going to mark that off. Just 1324. And other than that, I just don't really see anything happening in this market. It's been good for those people. I know Blake's been pretty active in here. That took a shot at it against this 114. The market still remains under pressure. Obviously, like I said, but this 1266 is pretty solid, and you're seeing, I think, a little bit of short covering in there. I really don't see anything of any interest, to be honest with you, whatsoever in this market at this point. Those that did go in and sell it against this 1430 has been a key level here. You can see how that 1430 has been pretty key on the way up and then providing support, and then we break below it, then it becomes resistance. Resistance again, this is actually pretty, you know what, when you look at this, this is a pretty good bar right here if you think about it, because when we ran all the way back up, and you can see this has been pretty key support. I had this marked off from before, this 1430. It becomes support, we break through it, and we make a run up to 1430, and we fade against it. And I think the true tail was right in here. You can see it's almost like a graveyard doji. We pull back, and then we make one more last move here, and then you get this engulfing bar right here. And it's not like as if this is a 5-minute bar, even a 30-minute bar. It's a 2-hour bar. And then you see the market just sit here at 14. So once we start to break, then technically, I think it has more to do with the technical set. Then we get the momentum really starting to finally move. You think about it, even though the SPUs were rallying, the dollar yen just didn't want to rally. And I think Blake tweeted that out there about the divergence there. And I don't know if it said as much about the SPUs as it did more so about the dollar yen. It just wasn't willing to go on and rally when the SPUs were moving higher. But I don't see anything in this market at this point. I don't see anything. I think the best thing is to go and cover. Doesn't mean we won't break lower, but as far as risk reward, I just don't see it here at this point. And but that's been a hell of a fall, and obviously the pressure remains, on this pair. But like I said, I don't see anything happening right here. Obviously, if the SPUs were to come under a lot of pressure, we'd go in and try and make a move below that 1266. But I don't see anything here that's advantageous as far as a move. Yeah, Rich, we already covered Eurodollar. We always cover Eurodollar as the first market to cover. So at this point, I would expect, like as I mentioned, dollar yen to remain relatively quiet. Obviously, we're pulling back somewhat in the SPUs, which is going to keep the pressure a little bit. I mean, unless the SPUs make a real run beyond this 1910, unless we can make a real run below 1910, I just don't see a whole lot left here. Doesn't mean we can't dip a little bit lower, but I just don't really see anything of any. If you haven't already, my point is, if you haven't already made it, and I know Blake's been on top of this, if you haven't already made it, I think actually I saw in Blake's tweet that he had actually covered his yen positions yesterday evening or late yesterday afternoon or something like that. So, like I said, if you haven't already made, and I mean, I don't see anything that would dictate us really coming apart here in SPUs. Now, they may pressure them from here, but, and we'll certainly go and cover that, once we get back from the break. But like I said, if we've already had a pretty nice run against here, even against just the even the 1350. You know, if you got in there, and like I said, it's already had a pretty nice fall here in the dollar yen. And they're really doing their own thing. They're not even paying attention to what bonds are doing. I mean, and like I said, if you think about it, dollar yen is just marching to its own drummer, I guess, which strengthens its resolve, because even as SPOOs were rallying, dollar yen wasn't paying that much attention. It wasn't like they were breaking above these highs. I mean, with SPOOs making it all the way up to about, what, 1933, you'd have expected potentially this dollar yen at least to have made it to the 38%. And it was just kind of doing its own thing, and not paying attention to anything, except that it wanted to go lower. Regardless of what's been happening in the bonds. We're trying to come into this little bit of support here in the SPOOs here against this 1912, and we'll cover the SPOOs and obviously the gold and crude oil market once we get back here from break. And usually before Blake comes in, then we'll take a look at the recap the euro real quick. But as I mentioned, it's relatively quiet morning. And it's just not, you can see it right now. There's anything happening in euro. And I don't think, part of the reason why I think it also has been dead in the euro is because, like I said, with this whole Brexit mess, it's hard for the euro to take a move lower because that's actually supportive. So let's go on and take a break, and when we get back on the other side, we'll take a look at a few markets, and thanks for joining us here on the European Crossover. Okay, everybody, and welcome back to the European Crossover. As I said, the euro's relatively quiet. We're just seeing just a little bit of a pressure on the crude oil market after we weren't able to break out. The news had come out. There was a report that the Saudi, the finance minister said that they wouldn't cut, and we had the opportunity to break out in crude oil, and then that pretty much killed it, and then we've been under pressure since then. So we're going to move into crude oil. And you can see here we've remained under pressure. And like I said, we had the opportunity to actually break out, yesterday. And the market was potentially setting itself up to move much higher. Try to open this up a little bit. So it looked like we had the opportunity to go on and make a move up here towards the $35. The way the market, you can see here how we actually took out the prior high, and we're really starting to push them up in here, and it looked like we had a chance to go. But then we did get that report from the Saudi finance minister that said, they're not cutting, which it's not as if everybody would have believed that they would have cut, but had he not have come out at that time and said that, that would have technically, and even the feel of the market would have allowed. The market was looking where it was going to allow. People weren't going to stand in the way for us to make a move, a probable move up towards this $35. I think we could have pushed even beyond that. Probably got, as I mentioned, got to about $35 and change. But as we had made this high here, and they were trying to press them, and it's still relatively quiet. It's just a matter of where they're going to hit the stops. And they did hit the stops. They took them up to 34.21. And then we got the report come over the wires that the Saudi finance minister said they're not cutting production. And that basically took the wind out of the sails of the market. And then we just started going sell off. And then if you think about it, and that's what I was thinking about later on in the morning, I said, the they're going to remain under pressure because as the market broke higher, and this is a gap from they rolled into April, as they moved higher, technically the market was really set to make a move much higher. So people were going to, I'm not talking about scalpers, maybe not even per se day traders, but I think that there was an opportunity for this market to move much higher. So when they took the wind out of the sails there, you knew that they're just going to continue to remain under pressure. Now they did get quiet and they pressed them right here, but there was that opportunity. You know, everybody that had started to get long and said, you know, I'm going to ride it. I'll take it up to $35. I'll take it above $35. All these people are going to have to start getting out of their positions. And the market is aware of that, so the market was going to remain under pressure. Now, like I said, we had already come off quite a bit, so the market, you know, tried to hang on in this area. But once again, as you start to roll in towards the end of the week, you're going to know that the market is going to go in and press them and keep pressing them. Now it's just a matter of how much. I think we're probably a little bit overdone now here. I think this 32.17 is pretty decent area here. Doesn't mean we can't press them a little bit lower because, like I said, as you know, anybody that tried to play this long from here, and if you think about it, look, you know, we took out this high, and we took this high out with a 2-hour close, so it's pretty solid overall. I mean, it didn't break way up, but we got above these highs, so really anybody would have got their, you know, got their short stop out there, you know, saying, hey, look, I got to go and cover. We've closed above the recent high, and we've even pressed them a little bit higher even then. 34.17, 34.21, pushed them up, and then, like I said, then we got this complete engulfing line right here, and then that opened the door for us to test them lower, just from a price structure standpoint, and also almost like an expectation standpoint that, you know what, people are willing to say, you know what, it looks like we put in a temporary bottom, they can push them up. Maybe we're going to go and get them above $35, and that took the wind out of the sails, completely out of the sails there when that came out. And then it was just a matter of how much are they going to go in and press them. And we're still opportunity to press them some more as they're coming towards the end of the week. Although I think most everybody would have gotten out. This would probably just be a little bit, I think this 32.17 will probably be, will hold overall. Doesn't mean we can't, you know, there's still a risk down here at 31.89, but I don't see another leg down. Anything's possible. I'm just saying is from a percentage standpoint, you know, as we move down here and the market tries to hold, they could step in and try and buy it. There's still pressure. There's no doubt about that. Because when you look at it from an overall theme, I don't think anybody's going to rush in and buy them now. I'm just saying at the moment, I think that it's limited what it can do. Now, going to next week, we'll probably see a little bit of a bounce, but they may want to go and press them lower and move them back towards the 31.42, and then the market will see what it does or what it's made of at that point. I'm just saying for now. So here on the 30-minute, basically the same thing. You can even see that if you look at it on the exponential moving average, we've remained in the sell signal. Even though we made it up here to 33.01, we've remained in the sell signal. Right here, you can see here, right here. The momentum has continued to remain lower, and so this was the way to play it from a momentum standpoint. As long as that exponential moving average was not the faster one was not able to cross the slow one, the momentum has continued to remain lower. Like I said, we have a little bit of support underneath the market, but this is on the continuous chart, so it can vary just a little bit. But when I looked at the April chart, specifically, the numbers were pretty much closely aligned. Like I said, this 32.12 we mentioned on the 2-hour, I think it's 32.17, but you can see this 32.12 looks pretty reasonable here. But there's always going to be a little bit of a variation because, like I said, we just rolled over into the April contract. So I'm not really looking at any kind of fibs or anything. I'm more interested in looking at the levels before, especially when you see this kind of a huge gap. as we rolled over from the March into the April. I mean, if it was a little bit closer, so I'm not really interested in looking at any fibs and see where this price, unless it would fall off quite a bit. I mean, it makes it a little bit tough to, check these charts out here when when you see this kind of a huge gap. I mean, not only did we get, the prices close strong, but in the, they ended up actually going up another 80 cents into the open. And then on top of that, you had the gap. So, it's really left a big old space in here. I don't necessarily believe that this means that this is going to fill this gap, although at this point, the news has been bearish now. So it'll be, once again, the market's going to have to find value. We may go and eventually have to work down here lower as we go into next week because the pressure is going to remain that way, the way the market's going to look at it. You can see right now the market is just trading relatively quiet. Things will start to heat up once we get into the New York session. Yeah, Vlad says if you look at the CLJ6, it will show prices of the April contract and remove the gap. Well, yeah, that's true, and I actually pulled up the contract of the 30-minute on the April contract, but I do like the continuous charts. I like, even though there's this huge gap, and you're correct, if you want to, you can pull up just specifically the April contract and take a look at it from that standpoint. And I did do that already. I mean, and some of the numbers overall line up, but I prefer, I was just making a point that it makes it a little bit more difficult to read, but I did go on and take a look initially when I was looking specifically just pulling up the April contract. And, but like I said, I do like the, one of the things I've noticed is that when you use the continuous contracts, it works a whole lot better than just trying to roll over, especially when the market's not as, not as active before. I mean, obviously, the further you go back, April certainly wasn't the front month contract. The numbers will be close. I mean, you can, for the short haul, you can kind of look, obviously, this is 31.59. Probably move it on down here, about 31.56 is going to be a level where they'll probably look at, maybe also this, or about 32.06. So if you look at the continuous, I'll show you here. We already had it marked up. I'm trying to remember, see what it was. But anyway, like 32.03. So the difference isn't that much, but you're correct. It makes it lead. I know what you're trying to reference, which is a good point, but I get more objectivity when I look at them on the continuous chart. And I'll give you an example here. I treated this out on the inside call. When we were falling, I said watch 32.75. And that was this bar, and I actually put my limit at 32.75, and the market ticked down to 32.74, and I got filled. And then that's when we were jumping around like crazy. and I just scalped it out because the market already, the headline had come out. We were really starting to fall, and I even thought we had a little bit of support. I think it was like, I don't know, like 32.09 or something. I don't remember. I have to look at the 30-minute. And so on the inside call, I tweeted out, watch 32.75. I go, the market's still trying to find itself. Because it was, when you see it fall like that, then the market, they're really going to press them. And so I actually had my limit at 32.75. It got filled. The low tick was 32.74. But I didn't hang around for very long because it was acting so volatile, at the time. But that's what I'm saying is I like the perspective that the continuous chart gives me. And, you're just not going to be able to go way, way, way back if you're looking at the April contract. There'll be a lot of, a little bit of gaps, much the further you go back, a couple of months. So, yeah, when you see like a huge gap like this, it helps to pull out the individual month. But for the most part, I'd still rather use the continuous charts. So as far as a volume profile, getting an idea of where this, you can see here that the real point of control and real value, when we want to push it up higher, is going to come in around 32.96. And for today, in today's session, we're really talking at about 32.65 right in here, where you see the most volume, and then right below that about 32.58. So if we can see them pull up a little bit higher. So if you think about, like you're saying, you're seeing here, actually this comes in, like I said, this upper area where they're going to run into some trouble comes in around this 32.96. Now you can see here, there's some pretty good volume. Now this is the upper value zone today. This is the volume point of control yesterday, and right up in here, the day before. Just 32.96. That'd be huge. So if you come back over here, so you can see here on the 5-minute chart, we had a lot of, volume going on in 32.96, and you can see the significance here of this 32.96 right here. And comes right in here, right when we're running out of gas, just below this 33. So let's just go in and move back in. We'll take a quick look at the gold market. And before Blake comes in, we'll take a look at the euro. And you're really seeing a heck of a volatility here in the gold market. And I'll tell you what, I've been off. That's what I'm saying is now we're starting to see great volatility in the gold market. But you know what, I'm not even doing anything in because I tell you what, my radar is off when it comes to gold right now. I do not have a good feel, other than, like I said, about this 1239 being the bias pivot. But, like I said, now the crazy thing is that y'all remember is that when we're back in here, we're doing a fantastic job calling the the gold market as we vacillated between 1070 and we talked about 1086 being that key bias pivot, And the only thing is you have to hold them overnight. You always had to hold them overnight, which wasn't my cup of tea whatsoever. And that was the reason why I wasn't even active in the gold market anymore during this whole time. But like I said, if you were willing to hold it, they were, every time they'd rally them up, they just sell them down, and you just pick them up, and you just cover them in another 24 to 36 hours. You made a pretty good, nice, decent chunk of change. So now we finally get the, really some very nice intraday volatility. But I tell you what, my radar's so freaking off on this gold market, it's not even funny. So now we have the volatility, but I tell you what, I'm not doing a damn thing now, because I like I said, I would have thought this would have held them here, this 1219. And they actually pulled back about $2 against this move, I think it was. And they reasserted themselves, and they got to about 20. I go, okay, well, that doesn't mean anything. They can still go on and pull back. And then they just launched. And I thought 23 was pretty key. You can see that actually it should have been a little bit higher, like a 25. And I recommended a short at 25.80, and I said let them risk them up to 28.80, and it got right to 28.80, but then it came back down, fell all the way back down into 24. It's like 24.20 or something like that. So it had a chance to be up like about $1.50 or so, maybe a little bit more. But then it reasserted itself and then started to take off. And, probably it could have gone and taken a little stab here against this 1239. But I tell you what, like I said, I've been so far off on this gold. I'm not just like, if your radar's not on, just don't even do a damn thing. And that's what I'm saying is now we get the volatility, and now my whole radar is on this gold market is just off like nobody's business. So, like I said, I don't even know what this sucker wants to do at this point. I'm not even going to make it. I thoughts of what I'm saying is, because I just don't. Obviously, I had a good feel all the way in gold up until when like I said, we started taking off, and now, like I said, Blake made a good point there. It's holding above this 12, even though the SPOOs were rallying. So that was a pretty good, if you think about it, pretty good lack of confirmation. The SPOOs are going higher. Gold wasn't breaking it down. I thought they could take it down one more leg before they could launch up, but they took off. And even though they took off here, I would have thought maybe 12.20, maybe 12.23, and then a pullback. So I was surprised to see it make it all well. Although we talked about this, the significance of 12.39, but that doesn't mean a hell of beans right now, because I'm just not going to touch it, because I just don't have a good feel on what this damn market is doing at this point now. Now that we do have the volatility, my radar has gone completely off. So Blake ought to be coming in.